How we're going to walk through exercise 6-14. Wright Company's cash account shows a $27,500 debit balance and its bank statement shows $25,800 on deposit at the close of business on May 31st. So we're going to be preparing a bank reconciliation as of May 31st. The beginning point of our reconciliation is going to be the ending balances. The cash account $27,500 we're going to put over here for the book balance. That's what is in our general ledger at this time. The bank statement balance at the end of the month is the $25,800. So that's what we're going to start the balance out on the bank side. Then we're going to be looking at the different items that it's given us. These are differences that were compiled by comparing the bank statement activity to the general ledger activity. These were the differences. They were recorded by one party and not the other. So now we're going to look at each one to determine where they should be on the bank reconciliation. So the first one, the May 31st bank statement lists $100 in bank service charges. The company has not yet recorded the cost of these services. So this $100 has been recorded by the bank. Oftentimes you'll see at the very end of the month if there's any kind of service fees or check fees or bank service charges. In this case, they're going to be placed on the bank statement at the end of the month. The company didn't know about these yet. So we're going to be recording them and we're going to be deducting them from the book balance. On B, outstanding checks as of May 31st total $5,600. Outstanding checks are checks that we have written. We've recorded them in the general ledger. We've mailed them, but they have not yet cleared the bank. So we're going to subtract them from the bank balance. Excuse me. Yes, that's right. $5,600. On C, May 31st cash receipts of $6,200 were placed in the bank's night depository after banking hours and were not recorded on the May 31st bank statement. So these are deposits in transit. So we have recorded them in our general ledger, but the bank has not yet recorded it. They'll probably record it on June 1st or the next business day. So we're going to add those to the bank balance. On D, in reviewing the bank statement, a $400 check written by Smith Company was mistakenly drawn against Wright's account. So whenever there's an error, first you want to determine, was it a bank error or was it a book error? In this instance, it was a bank error. So the check was written by another company, but accidentally added to our bank statement by subtracting the $400 check as clearing. So the reconciling item is to add it back to our bank balance. On E, the bank statement shows a $600 NSF, so that's insufficient funds check from a customer. Basically, they just wrote us a bad check, but we've already recorded it in our, or it says that it's not been, that we've recorded the original check that we received from the customer and we added it to our general ledger balance. The NSF part, where the bank said, hey, this check's not any good, we have not corrected our general ledger yet. So we need to subtract that from our book balance. Basically, we're going to go back to that customer and say, hey, you wrote us a bad check. You still owe us the $600. So now we've gone through the different reconciling items. We want to make sure that the adjusted balance per the bank equals the adjusted balance per the book, and it does. So we have completed the bank reconciliation. On the bank side, these first two are just timing differences. We recorded them in 1 month. The bank's going to record them in the next month, as well as the outstanding checks. The bank error, we're going to call the bank and tell them about the error so they can fix it. So again, they're going to be recording it in the next month. Any reconciling items to the book side, we're going to be making journal entries for. Remember, our general ledger shows $27,500 in the general ledger, and it should be $26,800. So we need to make a credit to cash, that reduces our cash, for the bank service charges and for the NSF check. So for the bank service charges, we would have some kind of account. It could be called bank service expense. It could be miscellaneous expense, whatever's on our chart of accounts. In the NSF check, we would debit accounts receivable. We would put it back on our books, and we would call the customer again and say, you still owe us the money.